We are here, we are here, we are here. On this amazing day, everyone. This is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back up to business. Let's check out the pair AUD, JPY. That is the Australian dollar versus the Japanese yen. Forex 101. Number one, we will be identifying market structure. Number two, we will be identifying overall trend in the market. Number three, we'll be identifying SR lines in the market. Number four, we'll be identifying patterns for entry in the market. Okay guys, let's start off with our market structure. Price started off in this candle here back in May of 1993. It went straight into a push down, created an area of support. Right then the market pushed right back up to the resistance, wasn't able to break, came back down, tried resistance again, shot it for a third time, wasn't able to hold to break through the resistance, market pushed all the way down. Broke the area of support from previously, wasn't able to drop down further. So what the market did, was come right back up. Broke through our previous areas of resistance, came back to retest the previous areas of resistance to push up further. So the market made a new area of higher highs. Wasn't able to break the resistance, market pushed right back down, put itself into a consolidation before the market pushed right back down again, and then the market tried to come back up to retest previous areas of resistance. The market wasn't able to break through, so the market came down, broke previous areas of support here. So the market pushed all the way back down to retest previous areas of resistance to push down further. So the market has created areas of lower lows back in November 2000. So this has been the lowest. This has been one of the areas. It's been the lowest ever. From there, the market pushed up to only come back down to retest previous areas, to push up again, to come back down to retest previous areas again. So I'm going to erase that. I'm going to do this over. So what I see here, I just peeped the pattern. So this first line I just put, that's the one leg of the W. So we see there's a W forming. Number one, there's a W forming. Number two, this is the first leg of the W. This will be the second leg of the W somewhere here. We have the third leg of the W here, which was a push down. And then the market pushed up for that fourth leg of that W. And then we'll find that retest near the areas of resistance here, but this is the retest below the resistance, so it's retesting something in this area here. And then once the market created that fourth leg of that W, that retest, and when you know, once we see the retest, after retest of the formation of W, we get that push up. And that's the push up right here. From then the market came back down to retest previous areas of support, to push up further, to retest previous areas of support again over in this area side here, for the market to push up again. And this is where the market has reached higher highs that it has ever been back in December of 2007. So this is a major area of resistance. So the market came up once, twice, three times. So I'm gonna backtrack, go back a little bit, because I see another formation in this. So I think there's a W here, but the W wasn't able to push up to drop down. I'm gonna show you guys. So this will be the first leg of the W. Then we have the second leg of the W. Then we have the third leg of the W. I don't know what's playing. So that's the third leg of the W, and then we have the fourth leg of the W for the push up, and then it's supposed to retest somewhere here, but it didn't retest, so the market just pushed straight down, and it was a hard drop too. Let me erase that. What was that? 1, 2, 3 candles that's extremely bearish that pushed the market all the way down to a major area of support once again of previous areas. So this is a major area of support, this is a major area of support, and that's a major area of support. So we can see the market is came back to test and retouch previous areas that it was already at. From there, the market wasn't able to break down further past this support line, so the market pushed back up. Once the market pushed back up, it came back down to retest previous areas of support. On top of that, the market put itself into a sideways consolidation. And then once the market put itself in a consolidation, the market pushed up out of that consolidation, retested, came back to retest previous areas of support to push up further. So it came back to the highest highs again for the 1, 2, 3, 4, 5, 6 time. Wasn't able to break through this major area of resistance here. So the market dropped right back down. So the market is most likely trying to return to previous areas of lower lows. So it has a retest here, and then the market just went down from there. So there's a little few spikes here. So we start seeing spikes. So spikes here, we have spikes here, spikes here, spikes here, spikes here. There's a spike here, there's a spike here. So when I start seeing these spikes, this shows me that the market's trying to turn up. So it's trying to turn reverse on the way down to go up, and we can see that when the market pushes all the way back down to come back up, to try to come back up again, wasn't able to come up, so it pushed down again to major areas of close to major areas of support. So then the market pressed 2 pins to the bottom, and then the market pushed up at least once. Like it's going to be another second push up that's retesting previous areas of some type of resistance. So that's market structure. We're going to walk over to number 2 and identify our overall trend in the market. Okay, number 2, we will be looking for identifying our overall trend. So we know this area is here where the market pushed down. We got 2 antennas to the bottom, so then the market's trying to push up. So there's an uptrend coming here. And we can see that our trend line, our candles are respecting our trend line that we just placed. Number 3, we will be identifying SR lines on the monthly time frame. We're going to zone this area off to show us what we're working with. So this line here, the top of this rectangle, the top of this rectangle will be the highest high. If it breaks through this rectangle, it's going up further. If it breaks down through this rectangle, it's going to drop all the way down. So what I did, I put the market into some type of range for myself, so when I go down time frame, I can see what's going on in the market. So next, we're going to add our SR lines on the Okay, so when adding our SR lines, first thing we're going to do is we're going to look for price action. Price action is the last active candle, which is this green one. So we're going to look at it and say, okay, if the price break up to the next level, where would it go? So it will be here. So price is trying to return here. We're going to look for price action again, and we're going to say if price action here and it had to head down to the next level, how far it would go down. So that's when you look for peaks. So there's a peak here. There's an inverted peak, and there's also a peak here. We're going to go down the time frame to our weekly time frame. We're going to add our SR lines on the weekly time frame. So we're looking for peaks inside within side of our green lines. So we have a peak here. I don't know what's playing.
One is white fat, and that's probably hanging out in your belly right now. It's extremely hard to get rid of. And then there's a lesser known.
All right, back up to business. So next we are looking for a inverted peak. There's another one here. We have some inverts here. We have another invert here. We have a few here. This is a peak. We may have another one here. So we completed our SR lines on our time frames. Next, we're going to head over to patterns for entry. Let's go down to time frame. So let's take a look at AJ to see if we see some type of pattern for entry. Okay, so what I've seen in the market when it comes to AJ on a weekly and looking out for entry is that, okay, so the market came down from a W here. First leg, second leg, third leg, got that fourth leg push up, got that retest, and then we have another push. And now we can see that with the last 2 to 3 candles, especially this last one, I mean, it's still forming, but we can see that they're not the same size. So something's going on in this market. It could be losing momentum. Let's go down to daily time frame and see if we can take a closer look. And so this looks like there's another W here. So first leg, second leg, third leg, fourth leg, got that retest on top of our SR line. So you can see how much is respecting it of resistance. And then the market pushed up to retest areas of resistance again to push up further. So something's going on in this market right here. And on the daily time frame, we can see that there's a red candle forming. If we check down to 4, we can see like the market's, I don't know, it's not, I can't call it. No call, no call, no call. So the market is in an uptrend. If I'm eyeballing it right, the market looks like it's trying to lead back to our close to our trend line or come back to our SR line to shoot up further. It's showing no pattern. I don't see no engulfings. I don't see no morning stars. I don't see anything at all. So if I don't see a pattern, I just wait. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for your attention. No trade for AJ. No trade for AUD, JPY.